How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, just like we do every single day here on this channel, we're going to be breaking down the markets, taking a look at the S&P, the Dow Jones, and the Nasdaq, and we're also going to be going over what I personally did today in the markets, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade here as we're creeping into the month of April in 2020. And you guys saw in the title, is the stock market bouncing back for good? Should we expect a lot more green to come? I'm going to give you guys my opinion on that in today's video. So all I ask from you is to hit that like button for me, and also consider subscribing if you want to see further content like this. Again, I upload content every single day on this channel about the stock market, and also consider joining our Discord group chat and our Facebook group linked down below in the description box. And let me tell you, those are free, so go get in there. There's no excuse not to, guys. So let's just get right into it. Starting off here with the S&P 500, which closed the day up 154 points, up 6.24%. And we know that the markets today were expecting the jobless claims number. This is what everybody was waiting for. And the range kind of from these different big financial institutions in terms of an estimate for this number were, I think, like 800,000 on the low end. I don't know exactly, but it was ranging from 800K, let's say, to 4 million. And the number came in, guys, closer to the high end here, roughly 3.3 million jobless claims for the week ending March 21st. And if you guys were looking at the futures this morning, I believe we were red. S&P was down close to 50 points, 50, 60 points, and the markets in general were red. And I think we were anticipating that the markets were kind of waiting to see at 8:30 a.m. what that number was. And you guys saw, the markets popped this morning. It's obvious based off of the closing price of the S&P and kind of what it did this morning. Again, we opened up. Huge bullish pull there, right? We see that, and we kind of uptrended for the rest of the day. And what this also tells me is, this jobless claims number, it was kind of priced into the market because this is not a surprise, right? The markets were kind of expecting this CV, obviously causing a lot of people to lose their jobs, and they were expecting this number to be poor, which is another reason why we didn't see that massive dump off. If it was a surprise, this could have stunned the market to the point where we would have moved down 5%, maybe 2-3%, whatever. But we rallied, guys. We rallied again. S&P up 154 points. And at the end of the day, guys, the trend over the past 3 days has been bullish. And with today's close, this massive rally towards the end of the day from 25.80 up to 26.30, the bulls are in charge in the short term. And another stat, this was the greatest 3-day rally in the S&P's history, and I believe maybe for the Dow and the Nasdaq as well. But we can see these past 3 days of trading, the S&P has gone up 17% from the double bottom at 2190, which is incredible. I believe the second largest 3-day performance was back in 2008, in the midst of the craziness 12 years ago, which we all know how that was. So pretty interesting times we're in, guys. We're dumping 35% in the matter of less than a month. Now we're rallying back up 17%, and I don't know what to make of it, honestly. And I know a lot of you guys out there, this is kind of throwing you for a loop, right? This is a learning experience. It's a learning experience for all of us. But me being more of a I'm looking at the macro now, being more of a fundamental, trying to make fundamental decisions, this doesn't make too much sense. And for me, honestly, I'm not jumping in quite yet, loading the boat on longs. I'm still sticking to my opinion here. And again, it's my opinion. I could be wrong that we're going to see further downside at some point. And you guys have to realize, looking historically at previous bear markets, there are always mini rallies in the bear market. It's not like the bear market is straight down 50%, no green days in the middle. It's not like that, right? We have a couple red days, couple bounce back days, right? And at this point, I know the rally's a lot more than what it was a couple weeks ago, but this is similar to what happened a couple weeks ago, right? The S&P tanked from 3,400 down to about 2,800 very quickly, and then we saw a 3-day rally. The S&P went from 2,850 up to around 3,100, which was, again, not as big as the rally we just saw, but still a 10% rally. So this, a 3-day 17% rally, it could very well end up dumping back off. Not saying that it will, but I'm trying to think of different scenarios that could end up happening, and that's something that I'm thinking could happen, right? And the truth is, we're still under two major moving averages here, one being the 50 SMA on this 4-hour chart, and the other one being the 180 SMA. Obviously, it's way up there, right? And for me, I would be more confident in going long, let's say, but still not too confident, right? But on a technical basis, I would be more confident if we were to break this 50 SMA and let's say get to maybe 2,700, 2,750. But then again, guys, the fundamentals are still deteriorating. Earnings for companies, they're going to be poor. The economy is still shut down at this point. There's still a lot of uncertainty, which is leading me to be quite nervous and skeptical when it comes to throwing a bunch of money at longs right now. And again, I've been saying that in these videos, and I would love to know if you guys think I'm crazy. Is this the start of a V-shaped recovery? What are your opinions? Let me know down below in the comments. Do you think fighting the Fed here is a bad idea in terms of, trying to go short when there's a bunch of stimulus, the Fed's throwing the kitchen sink into the market? If that's a bad idea, let me know. I would love to know what you guys have to think. And one other positive thing for the bulls here, we broke that top level of resistance that we were talking about in yesterday's video. Remember those two main levels to watch on the S&P? One of them was 2450. One of them, the other one was 2580. Well, we held 2580 as a support, and we broke right through it again as we rallied crazily towards the end of the market. So bulls are in charge here in the short term, and I would love to see how this ends up going. Dow Jones up 1350 today, up 6.38%, and very similar story to the S&P. We're trending right under that 50 SMA, which I think if we break, there could be, from a technical basis here, some more upside, although the fundamentals still scare me, guys. I'm not thinking that we're V-shaped recovering straight up to all-time highs. I'm really not thinking that at this point, but only time will tell, right? And we'll see how much this CV will continue spreading and deteriorating, that's a funky word there, the economy in the next couple of weeks. That's key, right? That is very, very key here. And if we take a look at the Nasdaq, up 5.7% today, up 427 points, and we can see two major resistances completely broken. This is good for the bulls. Nasdaq broke above 7650, resistance from a couple months ago, and it also broke above that 50 SMA on this 4-hour chart, which again, the S&P and the Dow Jones failed to do so. They're not quite there. So when we're taking a look at technicals, The Nasdaq is more, I guess you can say, the most attractive when it comes to breaking to the upside here, strictly off of these technicals here on this 4-hour chart. So let me know down below in the comments, guys. Again, what are your thoughts on this market, and kind of what do you think about my thoughts? I would love to know. Are you buying this rally, or are you still skeptical? Do you think there could be some more downside in this market? And yeah, I'd just love to know what you think. Now, we typically would be doing a market update today, or a trading update rather, but I didn't trade again. This is the second time this week that I did not make any moves today. And the truth is, guys, again, like I said, I don't want to force any longs, so I'm not going to. That's the thing. You know, I stick by kind of my rules, what I'm thinking in my head, and that's what I'm doing. I didn't take any positions, didn't take any short positions either. I'm just looking to see kind of how tomorrow plays out, and maybe I don't play anything tomorrow either, and you know, maybe, you know, starting fresh Monday is going to be the best idea for me, at least at this point in time. But I always say on this channel and to myself as a trader, if you don't see any opportunities out there, don't force anything. Sometimes the best trade is no trade, and today, for me, that was the case. So let's just go straight into these stocks and some ETFs here that I'm watching heading into April 2020, and I believe that week, or rather this upcoming week in the stock market is going to be starting, actually, no, it's not. It's going to be still March 30th on Monday, but either way, April is going to be Wednesday, April 1st. So the stocks that I'm watching, guys, are going to be the big dogs. I'm looking at Apple. We got some news yesterday that they're delaying the production of their, not the production, but the release, and I mean, yeah, the production as well of their iPhone, their 5G iPhone, which is arguably the most anticipated product in the history of Apple, just due to the technology advancement in the iPhone with 5G, right? So I'm looking to see if this affects the stock and the company further over these next couple of months. And today it seems like obviously the stock wasn't affected. It went up 5.26%, up nearly $13 per share, but still the 5G iPhone, it's still a catalyst that could drop this stock in the short term. There could be pressure if we get more negative news around this. So it's definitely one that I'm looking to keep an eye on at the top of my watch list heading into this month of April. Another big conglomerate tech stock is Microsoft. This one was up 6.26%. Up nearly $10 per share today. And based off these technicals, guys, Microsoft nicely held 135. And if we pull back here to the 3-year chart, you guys can see that's a pretty major support from a couple years ago, or actually no, just simply back in the summer of 2019. And back on that 4-hour chart, we actually broke the 50 SMA. We retested it as a support. Now we're slowly filling the gap up to this 180 SMA, which would put us roughly at $160. So if this market stays green tomorrow, let's say, we could get a short-term opportunity in Microsoft. But still, although we did break one moving average, you know, it's still risky because it's still overall downtrending, but still it's worth watching heading into April, as it is one of those conglomerates out there, big heavy movers in the S&P, as it is about 5% of the S&P. So it's worth watching if you're just a person that likes watching overall stock market activity, right? So Disney's one that I'm looking to buy. Not here, I'll be honest. I want to get Disney lower. I picked up some shares somehow, guys. I don't know if I mentioned this already on this channel. I think I might have in a previous video, but I picked up Disney in my Roth IRA, no kidding, at $79 per share. And you guys can see the bottom was $79.07. I picked it up more towards the high 79s. I think it was $79.80. And hindsight, looking back, that was a great buy. And obviously, I would have loved more lower prices in Disney, and I do expect them to go lower. So I'm not looking to buy here at 105. I'm looking to get more in the $80 to $85 range. And I've said this on this channel a lot, guys. Don't want to repeat myself too much, but Disney is one of those companies that if I had to hold a stock for 30, 40, 50 years, Disney would be it. Honestly, it's in my top 3 at least, because their brand is not dying. These movies, their characters, they're not going anywhere. Little kids are growing up. Now, I grew up with the characters. I know older people watching this video grew up with the characters. So it's a generational thing that's not going anywhere. So Disney, I'm looking to buy anywhere at this point under 90. Give me under 90. I'll be buying more Disney. And if my theory's right here that this market deteriorates even further based off of fundamentals and the spread, the continuous spread of you know what, we might just get those prices and I'll buy more of Disney. BA and FB are the 2 other ones that I'm keeping an eye on. BA, Boeing. Am I buying it here? Absolutely not. Buying it would have been a good idea down in the 90s. And even then, guys, there's still kind of the fear of it going BK bankrupt. But then again, they're not. They're going to be bailed out by the government, right? Because they have debt issues and they need the cash, right? Because they were busy, and many of these companies out there were busy kind of buying back their own stock, inflating the stock price, so they didn't have much dry powder when it came to hard times, which we're in right now. So that is why they're looking to get bailed out from the government, and that's clearly being priced into the stock right now. Let's be honest. This thing has doubled in the matter of a couple days, from $90 up to $180 right now. So Boeing, I don't know if I'm going to buy more. I cut my buying about 2 weeks ago when they cut their dividend, because for me, in my long-term portfolio, I kind of don't want to add money into a stock that's cutting their dividend, because my strategy is, at least one of my strategies long-term, is to invest in cash-heavy kind of blue chip companies that can weather the storm through recessions and that pay dividends through recessions. And again, BA cut their dividend. We may well we probably are in a recession now, so I'm not looking to add quite more to it now. But hey, maybe in a year, couple months, who knows? I might change my mind. We'll see. Facebook is the next one, which honestly, it hasn't rallied too much. It's still pretty beaten down. And I would love to add Facebook in the 120s, 130s. And I do expect if we get that leg down in this market, it could very well happen, I'm going to be picking up some Facebook. And the next one is MasterCard. This is one that I love. I picked up some MasterCard in my M1 account, I believe. I forget, honestly. It was a couple days ago I bought it, but it was more towards the low 200s, and now obviously being in the 260s, close to the 270s, I'm not looking to buy MasterCard here. I would love to see if I can get more shares in the low 200s, heck, maybe even in the 180s, 190s. But then again, I could be dreaming if this, to think that stock is going to drop $80 again. But who knows? Things get ugly, guys. It's gotten ugly. We've seen it in the past. And 2 stocks that are recovering like crazy that I'm watching, one being Delta, DAL, Delta Airlines, up not too much today, only 60 cents, up about 2%, but still it's up $12 over the past 3 to 4 trading days. CCL is another one that it's just gone ballistic, guys. It got crushed from $50 down to $8, and in the past couple days, it's doubled from $8 to nearly $18. It's more than doubled. So in this time of stimulus, right, optimism for the economy, this little short-term optimism, this little bounce, we may see these beaten, battered down stocks continue to run up. CCL is one of them, again, Delta, and a lot of these other cruise lines too. Is RCL one of them? Royal? Yeah, Royal is one worth watching. It's doubled in the past couple of days. Norwegian Cruise Lines, I forget their ticker symbol. It might be NCHL, probably not. But yeah, that's another one that I'm watching. And again, in general, these beaten down stocks, maybe even Boeing, guys, this could be a short-term trade, although I'm not looking to invest in it, at this point, add more to my investment. It still could be a short-term trade and maybe even a short opportunity at this point since it's rallied so much, it's overbought. Very overbought. These are some different opportunities that I'm looking at here in April of 2020, right? Gold /GC. /GC, you guys can see it today. Gold was up 1%, up almost $20 an ounce. And earlier in the day, I believe it was pre-market, gold was actually up to, you guys can see it, $16.72. So we were up about 2% in the price of gold today. And that was, honestly, the spike we saw was because of maybe anticipation of this jobs number, jobless claims number, although again, it was already kind of priced into the stock market. People were still buying up some gold as it is a quote-unquote safe haven, just to kind of hedge against it at the end of the day. That's why we saw the pop, and then right around 9:30, kind of as the news fizzled away in terms of the 3.3 million number, we started to get the deceleration of gold, and we slowly lost 20-ish points from the beginning of the market towards the end of the day as the markets, the stock market that is, went up, right? So it moved gold, that is, inversely to the stock market today. And when I'm watching ETFs for gold, GLD is the main one that I'm watching, right? If the market turns down again, gold sees a spike, this could be a very favorable day trade, swing trade even. You guys can see if you were to buy in the 130s, 140s, you would have made a nice profit just from simply swing trading GLD, which at the end of the day, it really just tracks the movement of gold. You guys can see it's very correlated, the technicals that is, to gold. You guys can see it for yourselves, right? So overall, those are the main stocks and one ETF, the GLD ETF, that I'm watching heading into this month of April, and kind of some thoughts going through my head around the markets and whether or not I think they're bouncing back. I really think that this, there's further downside. The fundamentals are still deteriorating, and the stats really don't lie, guys. The numbers really don't lie. We could be caught up in this short-term 3-day fairy tale of, oh yeah, the markets are coming back up, but the reality is we're in a recession right now. Whether people are saying it, admitting it or not, we're in a recession right now. This virus is getting worse. And it's going to continue hurting the economy, guys. So be careful out there. Be cautious in your trading. There's a lot of money to be made, but there's a lot of money to be lost too. So be cautious. Take the opportunities when they come. And yeah, I hope you guys enjoyed this video. If you did, hit that like button. Consider subscribing to the channel. And if you want free money, guys, you can claim your 2 free stocks from Webull, valued up to $1,400 with a deposit of $100 down below in the description box. So I'll catch you all in the next video. Hope you all had a great day, and I do appreciate you guys as always. Remember that watching these videos means a lot to me, you watching them. So yeah, peace out. Go get your 2 free stocks, link down below. Peace out.